I'm Yuko Aotani in Tokyo. People around the world are opening up the financial pages or watching the news on TV and starting to see glimmers of stability. A drop in the unemployment rate in the United States, encouraging manufacturing numbers from there and China, and growth in emerging markets. But many have read too many stories the past few years to get too excited about the global economy. Some of the world's leading economic minds have gathered at the Tokyo International Forum for the annual meetings of the International Monetary Fund and the World Bank. And NHK World's Ron Madison is there and will be for us all week. So, Ron, I was hoping you could break this down for us. What exactly is going on there?
Well, Yuko, there's lots going on. Already been a very full morning. Lots of people here. We've got finance ministers, central bank governors, and other officials from 188 member nations all here now to really, try to agree on how to deal with the problems that they share. And as you point out, they do have quite a few of them. Of course, we've got the debt crisis in Europe, but also another factor is slowing growth in China. Also, political problems on the horizon in the United States as well as other places. Now, the economists from the IMF have answered some of our questions with their World Economic Outlook. We'll have the details of that coming up in just a few minutes. Now, also, finance ministers and central bankers from the Group of Seven Nations will be meeting to discuss the challenges that they share. Organizers have scheduled somewhere around 200 seminars as well as other events to discuss finance, poverty, as well as a whole host of other challenges. We've got even an example from right here in Japan. Many of the people attending will be heading up to northeastern Japan to see the reconstruction efforts from the earthquake and tsunami last year.
Right. So help us through this, Ron. The International Monetary Fund, the World Bank, what roles do each of these institutions play?
Yeah, that's right. Lots of people are really confused about the differences really from the very beginning of this. Even a founding father of these institutions, economist John Maynard Keynes, admitted that he was a bit confused. He thought that the fund should be called a bank and that the bank should be called a fund. Really does make sense. Both of them did come out of the Bretton Woods conference in New Hampshire near the end of World War II. The International Monetary Fund's main role, though, is to extend financial support to countries in crisis. So one example, it has recently provided loans to Greece as the Greeks there deal with their debt problems. Now, IMF economists analyze prevailing trends to really try to prevent economic crises like the ones we've seen in Europe. They like to say that the IMF is really an enemy of surprise. Now, in terms of the World Bank, that's primarily an institution focused on development. It supports poor countries' efforts to pursue economic growth. One example also from here in Japan, Japan received World Bank loans right after the war for reconstruction. We've had infrastructure projects like the Shinkansen bullet train really helping to propel this country into a period of high growth.
All right, Ron, now that we are up to speed, tell us what's happening there today.
Well, IMF economists wasting a little time today, Yuka. They've laid out their World Economic Outlook straight away, and that outlook not that bright. They've actually lowered their growth forecast slightly to 3.3%.
The world economic recovery continues, but it has weakened further. In advanced economies, growth is now too low to make a substantial dent in unemployment.
Now, Blanchard said budget restructuring and a weak banking system are all pulling down growth in many advanced nations. He said Eurozone countries were susceptible to strong shocks. He's projecting the region's economy will shrink by 0.4%. He said that they're really concerned now about large emerging economies, too. China's projected growth was down 0.2 percentage points from the outlook 3 months ago. India, meantime, down 1.3 points. Now, the forecast saying that Japan and the United States should actually see growth of 2.2%. IMF analysts predict growth globally will gain pace next year up to 3.6%, but they warn that Europe's debt problems will indeed remain a threat. Now, Blanchard said the lessons of the last few years are now clear. I had a chance to speak with him about some of those lessons and also about what financial leaders still have to learn. All right, so it does seem like this recovery is losing a little bit of steam. Take us through where we stand right now in terms of the global recovery.
Okay, so I think the first thing to say is that this is still a recovery, right? We have numbers for the world growth of 3.5%. That's a recovery, but it's clear that it has weakened since last time we had forecast, which was 3 months ago. So that's a bit worrisome, just a bit. The reason is probably an increase in uncertainty. And there are many reasons always, but one is a decrease in uncertainty about what policymakers are going to do in a few crucial parts of the world. And I think that explains the slowdown.
Okay. Now, one thing that you do say is that accommodative policy seems to really be underpinning the growth that we are seeing right now. In fact, we are seeing what's almost been a concerted effort, really, between the European Central Bank, the U.S. Fed, as well as the Bank of Japan. Have they done enough, or would you like to see more?
Well, they have done a whole lot. Surely much more than one might have expected at the beginning of the crisis. They have gotten, the rates that they directly controlled more or less to zero. They have intervened in some markets. They have taken, aggressive stance. Are there more things to do? Yes, at the margin. QE3 in the US is probably useful. This scheme in the UK called Funding for Lending. These are useful schemes. They don't quite do the same as monetary policy in normal times, but they work, and anything we have, we should use.
Okay, and what about Europe? We did get news today that the European Stability Mechanism was launched. Do you think that it can be fully mobilized in a timely manner to really help mitigate what's going on in Europe right now?
I think the very good news is that the Europeans have understood that it's not, they can't do it bit by bit. They have to have an architecture which makes sense for the Eurozone. And the large contours, I think, have been defined. And in that context, the fact that the ESM is coming online is a very important step. Now, I think the thing that we're all worried about is implementation of these fairly general promises. If they implement it, I think that we can be reasonably optimistic that things will turn around.
How confident are you that it will be implemented in time?
Well, we've learned that it doesn't happen at once, that sometimes there are good news and then some bad news and then some progress. I think we may have to be ready for more. Eventually, I'm optimistic because there is no alternative, and there's just no other way.
Okay. Now, one thing that I have heard you say is that you don't really expect to see a recovery until about 2018, which would basically result in a lost decade. What do you see the global economy looking like on the other side of that recovery? Will we have a new normal, so to speak?
Well, first, the recovery is taking place, so it's not 2018. The question is, when do we get to something like where we would have been absent the crisis, which is a more ambitious goal. 2018, I don't know if it's 2018 or 2016 or 2020, but it's clearly going to take time because there are all kinds of things which need to be repaired. I think when we get out of all this, the financial system will probably look quite different. If there's one lesson from the crisis is be careful with your financial system. So it will be much more regulated. That would, I guess, will be the major change.
All right, well, there certainly does seem to be a lot of wild cards on the global front. We've got at least 3 major elections, as well as a change of power in China. This could point to a high level of political uncertainty at a very critical juncture. How tenuous, really, does this make your projections now?
Well, the projections are conditional on some assumptions as to what will happen. So we assume that, the U.S. will not jump from the fiscal cliff, that they'll find some way. We assume that what the Europeans have promised will be put in place, not overnight, we're realistic, but fairly steadily so that the spreads on periphery countries' bonds will come down. And in China, we assume that what they need to do to maintain growth around 8%, they'll do. Now, if this doesn't happen, could be much worse.
All right. Okay. Thanks so much for your time today. Good to talk with you. All right. Now, you heard me talking there with Mr. Blanchard about the European Stability Mechanism. That's one of the key tools now in the defense against further threats in the region. Eurozone finance ministers launched their new rescue fund just as the meetings here got started. Now, the European Stability Mechanism is a regional version of the IMF. The 17 finance ministers in the Eurozone gathered in Luxembourg for the inaugural board meeting of the fund. Their new tool does replace emergency measures that were established for Greece and other cash-strapped countries, the European Financial Stability Facility. Now, the fund's lending capacity is going to be about $650 billion. Member nations will contribute to it in line with the size of their economy. The people who run it will be lending money to governments in need, and they'll use it to purchase state bonds and bail out banks directly. Analysts say they do expect one of the first tasks for those managers will be to purchase Spanish sovereign bonds. Well, IMF economists zeroed in on the fiscal health of their host. They said planned increases in the consumption tax will not keep Japan out of trouble. The economists released their latest report on the fiscal outlooks for various countries. They're predicting that Japan's debt will rise to nearly 2.5 times GDP in 2013. Now, lawmakers have passed a bill to double the consumption tax rate to 10% by 2015, but the IMF report says that's just not enough. It's calling on leaders to carry out additional large-scale tax hikes along with spending cuts, and is saying now that Japan really needs to generate at least $250 billion in revenue over the next 10 years. That would add up to more than 5% of GDP. Well, here is an interesting side note. Chinese bankers had planned to be here, but they're going to be staying away. The state-run Xinhua news agency says the bankers are protesting against Japan's nationalization last month of islands in the East China Sea. Japan does control the Senkaku Islands. Chinese leaders say, though, that the territory belongs to them. Representatives of the Industrial and Commercial Bank of China, China Construction Bank, and Agriculture Bank of China will all be skipping the meetings. Now, Xinhua quoted a Chinese Commerce Ministry official as saying the decision is further evidence that Japan's unilateral action is freezing relations. The news agency says that the Industrial and Commercial Bank of China is the world's largest bank, and other institutions are among the top 10 in terms of market value. Senior officials from China's Finance Ministry and Central Bank are still expected to take part, though. Now, the people who lead the IMF and World Bank had originally named Egypt as the host of these meetings, but political instability there has prompted them to switch locations to right here in Tokyo. Now, this isn't the first time that the meetings have taken place in Japan. Quite a while ago, the last time, 1964, in fact. That was also a familiar year for many people. That was the year that Tokyo hosted the Olympics. At the time, the economy was really humming along. We had Japanese companies exporting everything from ships to steel. We had our bullets trains humming right along, too, as the first Shinkansen sped along the line from Tokyo to Osaka. Now, the meetings provided Japan with a chance to show how it had rebuilt after World War II. Organizers hope to use these meetings to highlight their reconstruction efforts in northeastern Japan. Well, World Bank and IMF officials are discussing all sorts of things somewhere down there, and they're going to be here all week, and so will we. We're going to be back, in fact, at 8 o'clock this evening, Japan time. We'll be speaking with one of the hosts of this meeting about their hopes and their challenges, and we'll have plenty more, so please be sure to stay with us.
All right, thank you very much there. On that was NHK World's Ron Madison at the Tokyo International Forum. Now, Mitt Romney is taking aim at U.S. President Barack Obama's foreign policy. The Republican presidential candidate said Obama's handling of the Middle East is increasing the risk of conflict. Romney spoke about the situation in Iran and Syria. He said the region is more dangerous now than when Obama took office. He accused the president of employing a strategy of passivity.
It is our responsibility and the responsibility of the president to use America's great
Newsline. I'm Keikichi Hanada in Tokyo with the latest at this hour. Economists at the International Monetary Fund have looked down the road a ways. They see a slow and bumpy patch ahead. They released their World Economic Outlook at the opening of the IMF and World Bank annual meetings in Tokyo, and they cut their forecast yet again. Ron Madison is following the talks for us at the Tokyo International Forum. Ron, before we get to the numbers, what are you hearing from people there?
Well, Keikichi, we've spoken with a number of influential economists, and the general sense that we're getting here is one of uncertainty. Finance ministers, central bank governors, and their colleagues from 188 member nations have all read, and many of them have even written about the trouble spots that we've all been hearing about so much lately, Greece, Italy, and Spain. But they also see some question marks elsewhere in Europe, and in fact in the United States too, if politicians there fail to agree on policies that promote growth. Let me read you one line now from the report. It says the recovery has suffered new setbacks and uncertainty weighs heavily on the outlook.
Ron, that looks like a weighty forecast. What jumped out at you from those pages?
Yeah, actually, quite a weighty book as well, Kikichi. I'm guessing about 230 pages here. Now, the folks at the International Monetary Fund release this outlook 4 times a year, but their wording, we've noticed this time over the last 6 months, really sounds more and more pessimistic. They say that the risks of a slowdown are, in their words, alarmingly high. Now, they've revised their forecast down to 3.3%.
The world economic recovery continues, but it has weakened further. In advanced economies, growth is now too low to make a substantial dent in unemployment.
Now, Chief Economist Olivier Blanchard outlined factors that are pulling down growth in developed economies, including budget restructuring and a weak banking system. He said the crisis in the Eurozone remains the most obvious threat to the global outlook. Now, he projected that the region's economy will shrink by 0.4%. Contrast that now with the forecast for emerging markets and developing economies, that coming in at 5.3% growth. But Blanchard and his colleagues see the downsides even in that figure. They've revised China's growth down 0.2 percentage points from 3 months ago. India's down 1.3 points. They forecast an increase of 2.2% in both Japan and the United States. And they do predict as well stronger growth worldwide next year at 3.6%. Now, Blanchard said figuring these things out can make for a complex puzzle. I had the chance to speak with him earlier about what pieces need to fall into place. All right, so it does seem like this recovery is losing a little bit of steam. Take us through where we stand right now in terms of the global recovery.
Okay, so I think the first thing to say is that this is still a recovery, right? We have numbers for the world growth of 3.5%. That's a recovery, but it's clear that it has weakened since last time we had forecast, which was 3 months ago. So that's a bit worrisome, just a bit. The reason is probably an increase in uncertainty. And there are many reasons always, but one is a decrease in uncertainty about what policymakers are going to do in a few crucial parts of the world, and I think that explains the slowdown.
Okay, and what about Europe? We did get news today that the European Stability Mechanism was launched. Do you think that it can be fully mobilized in a timely manner to really help mitigate what's going on in Europe right now?
I think the very good news is that the Europeans have understood that it's not, they can't do it bit by bit. They have to have an architecture which makes sense for the Eurozone. And the large contours, I think, have been defined. And in that context, the fact that the ESM is coming online is a very important step. Now, I think the thing that we're all worried about is implementation of these fairly general promises. If they implement it, I think that we can be reasonably optimistic that things will turn around.
All right, well, there certainly does seem to be a lot of wild cards on the global front. We've got at least 3 major elections, as well as a change of power in China.